Share my screen. So good morning, everybody. Thank you for joining us for our App of the Month webinar. Today, I'm joined by David Tuck, founder and CEO of Chaser. Good morning, David.
Good morning, Will. Thanks very much for having me.
It's a pleasure. Thank you for joining us, everybody, this morning. I know we all know we are in incredibly uncertain times. Businesses are affected in a way that they haven't been affected for an incredibly long time, perhaps forever. So it's the topic we have this month with Chaser is ideally placed, because I'm sure that many of you will have either clients that are using COVID-19 as a reason to delay paying invoices, or you have clients that are using COVID-19 as a reason not to be paying invoices. So really timely that David is here to share his many years of experience working in finance departments, but also the number of years that he's been working and building Chaser. And David and I first met many years ago, kind of around about the time that Chaser was launched. How long ago is that now, David?
So we launched August 2014, and yeah, I think we first met very early 2015.
I think that's about right. It seems a very long time, and it's great to see how Chase has come on and the team has developed over that time. So the plan for the session today, this is our agenda. So we're going to introduce David and Chaser in just a moment. But really, the theme of the session is how do we manage credit control effectively against the backdrop of the economic environment that we are faced with right now. So David's going to share his experiences in terms of some of the things that you can do to help your business, but also your client's business, thinking about some of the tools and techniques to identify who genuinely can't pay, and those that perhaps we need to help understand how they can pay, which leads into things like how do we put in place payment plans, how do we manage those, and we'll have some time for questions and things at the end of that. So for those that don't know me, my name is Will Farnell. I'm one of the co-founders at App Advisory Plus, but I'm also the founder of Farnell Clark, an accounting firm in Norfolk. We've already said we're joined by David, and David's going to do his introduction for us in just a moment. So the plan is we're going to be done by 10:30 to let you all back into your working day, but hopefully we're going to share some really valuable knowledge and experience with you over the next 25 minutes or so. So David, tell us a bit about you, what your background was, how Chaser came about, and what Chaser does for SMEs and accountants today.
Perfect. Well, thank you very much, Will. Good morning, everyone. So as Will said, my name is David Tuck. I'm the founder and CEO of Chaser. My background, I spent the first 5 years of my career in practice doing my qualifications. I did my ACA, and then I did the Chartered Tax Advisor qualification, then moved out into industry, headed up a succession of SME finance teams, all of whom sold on payment terms. Was lucky enough to get the chance to move into tech, into software. Started using cloud accounting, and always been entrepreneurial from a young age, and everything really came together in the same melting pot. So experiencing the challenge of selling on payment terms firsthand, thinking there must be a better way, looking around, not being able to find it, and being able to conceive of what that solution could and should be. So started Chaser to be that solution, and launched in August 2014. So we're 4 months off our 6th birthday. And Chaser is cloud credit control software. So if you remember the Ron Seal adverts of does exactly what it says on the tin, that is us. We automate the polite persistence that pays in communicating with customers about their outstanding invoices, all with a human touch, so that it has impact. Credit control is an inherently human process to move a customer from not having paid their invoice to having paid it. We're a customer relationship management system that logs automatically all of the communication in the credit control process, so everyone involved can have visibility at the click of a button. No more routing through inbox sent items to piece the picture back together. And we're insights, we're intelligence about how best to chase up your customers to pay, who are your good and bad paying customers, who responds better to different approaches to chasing, so that you can make the best, and clients can make the best credit control decisions. We've been around for, like I say, nearly 6 years. We've got some kind of great sort of reviews, great accolades in that time. So we won Xero's App Partner of the Year award. We've won the Accounting Web Cloud App of the Year award for the last 3 years. And we are the 4th highest reviewed product on Xero's App Marketplace, by a multiple of 4, the highest reviewed product in the debtor tracking credit control category. How we work with you for your clients is one of 2 ways. So we'll train you to be able to introduce Chaser to clients that could benefit from running it themselves. That will typically be your larger clients who have the kind of finance and credit control proficiency within their team. Or we will enable you to provide virtual credit control. And this is something that we've really brought to life. We've pioneered over the last 2 years, and it's very much where we see the next extension of the virtual finance function, with you as trusted business advisors delivering professional level credit control to your clients, using us as a platform to do that, because 90% of SMEs are 1 to 10 employees, so don't have the scale to be able to have any finance expertise within their team. And so they're already now taking advantage of the opportunity to access the virtual finance function, up-to-date bookkeeping, management accounts, and we see the next frontier of that as you providing them with professional level credit control. Exciting new service offering for you and revenue stream, and fantastic ability for clients to benefit from a level of credit control outcome never before accessible to them.
Thank you, David. And the one thing that I always see is, whenever I talk to your accounting partners, and I know a good number of them, the one thing is that everybody is so positive about Chaser, about the Chaser team, about the product, incredibly loyal to the product, and that says a huge amount to you and your team, and what you've been able to build. So I know you know that, but I thought I'd share it, that you never hear anybody using Chaser who doesn't have really positive things to say about it. So great job on that.
Oh, thank you. That's very nice of you to say.
Pleasure. So let's talk COVID-19, coronavirus, all of the challenges we've got at the moment. So before we get into some of the specifics of credit control, you've got a lot of accounting partners, you're working with a lot of SMEs. Can you kind of summarize what you're seeing, what you're hearing in terms of how firms and businesses are kind of tackling the current world that we're living in?
Sure. I think we are all still trying to get our heads and our arms around about what that world is, and getting closer and closer to understanding that on a daily basis. But it is very much a moving beast. So it's a time of flux and uncertainty, unlike anything I can ever remember. And so, from our perspective, our users, the businesses we work with, fall into one of 3 categories right now: cash flow unaffected, cash flow constrained, cash flow frozen. We've got some businesses that are their businesses are basically unaffected, and some that it's created opportunities for them to be able to grow in the midst of. So, for example, providers of locum doctors, great opportunities for them. Cash flow constrained. So, and I'd say the majority of businesses are falling into this category, right? We're entering a recession. It's a wartime environment, and I don't mean that in the sense of we're not at war with your customers, but wartime things get destroyed. Recessions, economic activity gets destroyed. It's a completely different environment that our users are facing now, and the majority, their businesses are constrained. Whether you be a marketing or recruitment agency, there's still absolutely business to be done, but economic activity is contracting. And then there are the businesses that have unfortunately been frozen. I mean, we're not seeing, I guess, quite as many of those, because at the moment tend to be sort of B2C point of sale businesses, and we are working with businesses who predominantly B2B sell on payment terms. But equally, anyone who's in and around the events industry, aviation, there's all the different levels of the supply chain there. For example, we had one of our users who's runs a collection of netball leagues, and their business is basically just gone on ice right now because everyone's needing to stay indoors. And so we think about it in terms of those three categories: cash flow unaffected, cash flow constrained, cash flow frozen. There are a few businesses who are unfortunately in that latter cash flow frozen category. There are equally a few sort of fortunate ones, if you will, who are in the cash flow unaffected category, and then the vast majority are in the cash flow constrained category.
Yeah. Okay. So given that context of constrained cash flow, that kind of leads quite nicely, doesn't it, into what can we do to improve cash flow through more effective credit control. So first of all, what makes obviously you're running Chaser, but what is it about your background and things that mean you're the right person for me to be having this conversation with in terms of how we tackle cash flow in unprecedented times?
Sure. Well, I mean, first off, because sort of it's 12 years since the last recession, but I remember I was working back in practice back then, but it sort of changed overnight, the mentality with which we had to approach credit control. I remember the way we shifted to that sort of wartime mentality of weekly receivables review meetings, line by line, what confidence can we have in getting this fee in, what tactics do we need to approach it with, and that stays with you. I think that knowledge, it goes dormant, right? The muscle memory, because good times kind of don't require it. But it's been a real sort of adjustment over the last kind of couple of months to bring that back, to sort of mine the memories, if you will, to bring back that kind of that apparatus that's required now. And from our perspective, one of the things I think we've always done very well as a business is focus on, well, what can we be the best at? We've stayed very, very focused on credit control, on the sales ledger. How do you effectively go about that process and ensure that as close as possible to due date, if not earlier, you getting your invoices paid? And that's what we've been focused. First lines of code were written on Chaser in September 2013. We launched in August 2014. That's been the entirety of our focus. And now it really does feel like credit control has sort of, like I was saying earlier, vaulted within businesses right now from at times an afterthought, as it could be in good times, because things were good and people paid invoices, to now the environment is one of, you can't have that comfort that you had previously. You've got to question, am I going to be able to get every single invoice paid? Because and effectively throw out your existing knowledge about your customers and their payment habits, throw out your existing kind of process, because that was fit for purpose then. You have to go back to kind of square one and rebuild it for the environment that we're in now.
Yes, and I think if we think about what's kind of perhaps driven if we look at what all of the main general ledgers, so Xero, QuickBooks, and Sage, and others, that they're all talking about the importance of cash flow for small businesses, and it's probably, I think, the fact that we've got better access to data now than we've ever had before through bank feeds, so it highlights the ability to be able to tackle credit control in a much more regular, consistent way than perhaps we would have done traditionally, when we'd have done, small businesses wouldn't have done any bank reconciliation probably until year end, whereas now we're in a situation where that's happening more regularly and we've got better control over it, possibly. More an observation than anything else. But so in terms of credit control, I remember the very first conversation you had with me, and you highlighted the polite persistence pays, and you talked about something along the lines of 80% of late payments are not deliberate. It's just a fact of people forget, and I'm really guilty of that. So are we in a world now where polite persistence pays isn't enough on its own And really that kind of leads into the next part of the conversation. So if you're helping us, if you're advising accounting firms to help their clients, what are the three things we should be doing?
Sure. And because to go back to the earlier point, so we find 80% of invoices can be successfully collected through email chasing alone. There'll be one of two reasons why an invoice doesn't get paid on time, broadly speaking. Either the customer's forgotten or they're disingenuously sort of saying, well, I know the invoice is due, but I'm not a charity. I'm not going to voluntarily put money in my supplier's bank account when I can leave it in mine. And so the polite persistence pays because it forces them to justify the unjustifiable. It also helps in terms of the third and very, very small category of delinquents where there just isn't the money to pay. And obviously we're going to see a rise in that category. We're going to see a lot more people taking the kind of the opportunistic, well, not a charity. I'm only going to pay this invoice when someone's on my case. So that human persistence. So in that sense, polite persistence is going to pay more than ever, because I think you're going to really struggle to get any invoices that aren't covered by direct debits paid without some form of polite persistence pays in this environment, because a business is not going to voluntarily pay any of its invoices just in a charitable sense. That's just being realistic about this. In terms of, there's going to be a rise in delinquencies. So that's why, if anything, I think we're going to see businesses need to become more persistent. So that's one of the points that you can be informing your clients about. If you chased once every 2 weeks previously, that might have been fine before. That's not going to be enough now. You need to be chasing at least once a week, if not more frequently than that. I mean, still do it politely, because you don't want to, you've got customer relationships that you need to protect here. But I think in this environment, you've got absolutely license to chase more frequently than you were doing before. In terms of the three things for kind of with, advising clients about, I mean, firstly, it's important to not lose sight that credit control starts with sales invoicing. So get on top of that process. If you're not using a cloud platform or some kind of invoicing platform that enables you to do that really easy, you absolutely have to be, because an invoice, I mean, it stands for it, an invoice can only get paid if it's been issued. Not doing them at the end of each month, doing them weekly, even doing them daily, got to get those invoices out the door. Same in terms of purchase orders, if you're selling to businesses who require those in order to make payment. Can you be shortening your payment terms? Maybe not, but 30 days payment terms, that might have been fine for you previously. Can you shorten those to 7 days or 14 days? So that's the first one. Start with the sales invoices itself before you even get into the kind of the credit, the conventional chasing process. Then in terms of chasing itself, over communicate in general right now. Contact customers, find out how they're impacted by coronavirus, find out how their process has changed. They may have had to let people go or furlough people. You may need to be contacting a different person in a different way right now. You can't get that information too early. I mentioned it already. Generally increase the frequency of chasing, at least once a week right now.
Yeah.
The thank yous, which is something that you can send automatically with Chaser, a thank you is going to carry even more weight now. You talk about ensuring and building goodwill in customer relationships, and you're stressing how much you appreciate them making timely payment in the current environment, because there has never been a more important time to be top of your customer's priority list when it comes to which invoice is going to get paid.
Yes, absolutely.
If they're looking down that list and saying, well, we can only pay 10 or 20 grand's worth this week, how do you get yourself to the top? And that's a combination of, yes, the persistence, showing that you're on the case, but also the politeness, the goodwill. So bear in mind that there's those two dimensions, and make sure you're maximizing things there. And when I talk over communicate, the final point within that is, I'm not just talking with customers. Internally, the rest of the team has got to be aware of where things are from a credit control perspective. The last thing that you want, the absolute last thing that you want, is there's a customer who may be going through financial challenges, and your sales team is not aware of that, or whoever the relevant team is, makes another sale which increases your exposure to that customer, when, had they known about it, that sale wouldn't have been made. So the communication, both external with customers, absolutely, but internal, don't overlook that as well. The final one is have a payment arrangements strategy. First, root it in what you can afford. So use a cash flow forecasting tool like Float. Know what the position of your business is, because and you see businesses do this. They want to be good citizens. They want to help their customers out. They sympathize with the challenges they're facing, and end up making a rod for their own back by agreeing payment arrangements that they can't actually kind of withstand as a business. So it's got to start within what can we afford to offer in terms of payment arrangements to our customers, given our own cash requirements, and then segment those customers. And this is all this is know your customer from a credit control perspective. So cash flow unaffected, cash flow constrained, cash flow frozen. If they're cash flow unaffected, no payment arrangements there. They're just being opportunistic. For constrained and frozen, then it's a case of be pragmatic. You want to get as high a percentage of that invoice paid today, and then installments over no more than 3 months. Now, look, if it's a genuinely frozen business, if it's that netball league or whatever, a business that's basically on life support, well, then there's no point. There may just be no money there. Get a proof of that. Don't be afraid to get proof of that. Ask for a screenshot of the business bank account. Get comfort about that, because don't just unless it's a really, really long-standing, very close customer relationship, you're more than entitled to ask for that information to get comfort that payment arrangement is absolutely required. But equally, if it is a business that's frozen and is basically on life support, well, then you're going to need to just look at an outright deferral for 3 months, 1 month, 2 months, 3 months, and then continue to check in as and when, because that's the other problem about the current environment. No one knows how long it's going to last. So it's possibly in those situations where it's life support businesses. But for the constrained businesses, don't fall into a sort of binary trap, which is very easily with this of, okay, it just means an outright deferral. No, there is still money there. Economic activity is contracting. It's not it's not ceasing in the case of these businesses. They will still have the ability to pay. So you need to be kind of mindful of that, and you need to effectively be negotiating with that customer about what can they afford when, and they need something in place that works for both parties. Off the back of that, then get a direct debit in place for those installments, because it's been agreed. That's part and parcel of the agreement. Okay, great. Happy to defer some of the payment here, but we'll have a direct debit in place so that on the respective due dates that we agree for those installments, we have the ability to go and get the agreed amount of money. Yeah,
brilliant. And how can we identify where our clients or our clients sit in those three buckets you talk about in terms of unaffected, constrained, and frozen? What are the signs? What are the things we can look for?
So I think, without wanting to glib on it, as advisors, we will know what our clients do. We will be able to, profile their businesses. We know those industries. We know how they're affected in the environment. And then if we're using kind of cloud accounting systems and, potentially tools like Xavier as well to be able to profile them, we will be able to have the visibility on how their business has been affected. And, if nothing else, just pick up the phone and ask them, right? This is an incredible opportunity to, in times of need, create opportunities, create, how we can help that have never existed before. So, pick up the phone and ask. Give it some thought beforehand of what are the key questions that we can ask. And we've got our kind of key 3 questions from a credit control perspective. So if anyone's interested, please do get in touch with us. But yeah, you'll have a good kind of feel for it from what does the client do. You'll have visibility of their accounting information, but then you'll have the ability to pick up the phone or send them an email.
Brilliant. So we talk to people and we think that genuinely they can't pay the invoice now. What should we do? And what are the kind of the best ways to set up payment plans? What are the things that are important when we set up a payment plan with a client?
Sure. So, I mean, the things kind of like we covered a moment ago, the first off is you've got to be clear on what you can afford to do as a business.
Yeah.
You've got to kind of, you've got to get as much as possible like paid up front. If it's a kind of frozen business, then fine to defer things. Recognize that you're delivering an additional service to your customer here by putting a payment plan in place, and therefore you have the ability to back that up with direct debit. Say, okay, well, I'm prepared to defer some or a good percentage of this invoice over the coming months. In exchange for that, I want the ability to go and collect that money by way of direct debit, as part of the bargain, if you will.
Okay, so it's just getting that certainty, isn't it? And you say maintain the polite persistence and
then review
else.
it, and then review it, and then have a schedule in place in Chaser such that, okay, this is a customer I've moved onto a direct debit schedule. I know the due date's then, and then following up the minute, like literally the day after that direct debit was due to go through, if it hasn't gone through, to say, hang on, what's going on here? We had an agreement, this invoice, direct debit should have gone through. Why hasn't it? So that you continue to be on top of things. Yes, you've got a new agreement in place, but you're not being complacent that's definitely going to happen, because as we're seeing, the environment is changing very rapidly. We don't know what the next week, month, year is going to hold.
Yeah, sure. And talking about next year, David, as we kind of come towards the end of the session, what's the plan at Chaser? What are we going to see? What new services? What new product functionality is on the development plan for you guys?
Sure. So, I mean, on the product side of things, we completed a major release at the end of February, which had been about 18 months in the offing, which is effectively us completely rebuilding from the ground up our architecture to make it a lot faster, a lot easier to develop new features on. So that's ushering in a really kind of rich vein of product development now. So we've got kind of weekly releases now of new functionality to our users, which we're really, really excited about. We hired our first data scientist back in December, which is now giving us the ability to deliver a lot more intelligence and insight to our users to help them make better use of the functionality that we put at their disposal. So a really, really exciting time for us as a product with the kind of the rapid release of new features and functionality to our users. The other side of that is another really kind of exciting development for us and it's very, very timely with the economic environment we find ourselves in now. Earlier this year, we had quite a few requests from our users about help with collections and how could they go about addressing that need for the odd delinquent and customer invoice that they had, and that they would they tried everything that they could with Chaser, and that customer and invoice still hadn't paid. And so we looked at the market there, and frankly, we're just incredibly underwhelmed by the level of collections options that are available to SMEs. Just terrible in terms of aggressive, so loaded with complexity in terms of fees, so kind of so much like administrative work to be able to pass over that to a collector. And so we're actually launching our own collection service. So this is something that we've worked on over the last couple of months and piloted, so that we can deliver that service to our users, to businesses, off the back of them using our product, and chasing functionality, hopefully get 100% of invoices paid that way. But if not, kind of one click, pass it over to us, and then we'll bring to bear our kind of collections, our chasing expertise, and frankly, just put an additional. We have the ability to automatically escalate within Chaser as a product as it is. Escalating it to us as a heavyweight figure to say, hang on, we've been brought in by this business, by our user, to help and help get invoices paid that way. So we're really, really excited about the way that we can transform the experience of that, both for the customer as well. It's doing in a kind of respectful, human, still persistent, still firm way, because at the end of the day, it's an invoice that hasn't been paid, but doing that in a way that doesn't bring about a negative experience for the business's end customer, but also makes it accessible to SMEs who've never been able to use collections before for those invoices that they haven't been able to get paid. And like, for example, last year, £5.8 billion SMEs wrote off £5.8 billion of unpaid invoices. And like, there'll be some there that there was never going to be the ability to pay, but a huge amount of that will be because they didn't have a collection service that they felt comfortable accessing. And we're really excited to kind of transform, this incredibly kind of, backward and poor experience, both to the business with the invoice outstanding, but also their customer. And yeah, to be able to help like bring that 5.8 billion number down hugely.
Amazing. Excellent. Thank you very much. So let me just get the slides back here. Sorry, I pressed the wrong button. Don't want that. As we wrap up, thank you for taking the time. We'll share key takeaways in just a moment. Before we do that, if you haven't yet registered for your free account at App Advisory Plus, would be delighted if you would do that. That gives you access to our directory. And also access to some of our member offers. Chaser have a member offer at the moment, as you can see there on the screen. If you want to redeem that offer, drop Rowan a line on the email address there, and we can work with Chaser to get that set up for you. And finally then, for the session today, key takeaways. David, you mentioned these things a few times. So number one, if you're looking at credit control in this environment, make sure you keep in regular contact with clients. Think about where they sit. Are they business as normal? Have they got challenges around constraints on cash flow? Or are they one of those unfortunate businesses, particularly retail, hospitality, leisure, where they just have no cash flow whatsoever? Think about payment plans, get as much payment as you can, think about what you need as a business, set direct debits up, and remember, polite persistence still pays in the environment that we're operating in at the moment, and do sign up for your free account on App Advisory Plus. So thank you all very much indeed for taking the time. I haven't seen any questions in the chat box, so we've obviously done a sterling job. If anybody does have any questions before we end the call, do pop them into the box. Otherwise, thank you very much indeed for taking half an hour this morning to join us. Keep safe, everybody. This won't go on forever. At some point, things are going to return to some sense of normality, and we look forward to seeing everybody at the various accounting events which we will encounter towards the end of the year, I have no doubt. So thank you all very much. Thank you, David, for joining us. Thank you to your team for helping facilitate this, and we look forward to speaking again very soon. Thanks very much, everybody. Goodbye.
Thanks so much.